Hey gang, this is Mike with My Real Estate Dojo, and today I'm going to show you something that your high school teacher didn't tell you about, your college professor didn't tell you about, and you're probably not going to believe me. That's why I'm going to show you the proof right on these bankers' websites so you can see what's going on, okay? So let's pull the curtain back and dive in, because I don't like to fluff. I like to just get to the point, guys. I respect your time, and that's the way I roll. So let's go. So if you go to an average bank in America, one of these central banking systems, let's use one of these companies, Bank of America. Now I'm not picking on Bank of America. I'm just going to just use them as this example, okay? I like Bank of America. I'm winking, guys, okay? Anyway, so if you go into a regular Bank of America savings, so with the interest rate they're going to give you, okay, is 1% on your money, okay? So this video, okay, 1% right here, that's right. This video is twofold. The first thing is I'm going to show you how, if you have money in your banking account, you're going to lose thousands of dollars a year after year. Okay. The second thing I'm going to show you is that how the bankers treat you with your money. Okay. So again, let's go back to the screen. I'm going to talk about point number 2 first, because it's so easy for you to see. Let's say you have $100,000, you put it in the Bank of America or any of these banks. They're going to give you roughly about 1% interest on your money. Now, guess what happens? You go back to them and you want to have a credit card with the bank that you bank with. Okay? Guess how much they're going to charge you on your credit card? Let's go here. Okay? This is the credit card. This is a Bank of America card. Okay? I just pulled one of them. I don't have any credit cards, but I just want to show you. Okay? So you go there, you let them have your savings. Let's say it's $100,000. They're just going to give you 1% to you. Then you go back to them and you want to borrow a line of credit. They're going to give you a credit card, and they're going to probably charge you 24%. They're probably not going to give you this one. You have to have excellent credit. There's all these parameters that you have to fit into. They're probably going to charge you this percentage, okay? So let's take a look at this, guys, all right? Just to make it easier, I'm going to say they're going to give you 14%, just because it's going to make it so easier. So they're going to give you 1. That's it, okay? For them, the bank, you have to pay them 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. That's 10, 11, 12, 13, 14. Okay? Does that look fair to you? You give them $100,000, they just give you 1. But then if you want to borrow a line of credit for the same exact bank, you have to give them this much. This is right off their website, guys. And you know this number is more trickier. And as if any of you guys have dealt with any banks, it's so much trickier. You're going to end up paying a lot more than this. But I'm just giving I don't want to put the 24 in here. Does that sound any kind of fair? Now think about this. The banker that lends you the money wasn't even his money. It was your money. It was your $100,000 that he lent to you on a $50,000 line of credit. And now you have to give him a minimum of 14% or 24%. Does that sound any kind of fair to you, okay? Now, let's go to a home mortgage, okay? And that's where the bankers really make their money, is to the home mortgage, even though the interest rate is so lower, that they fool you and fool me through the amortization scam that I'm going to do another video about to explain it, because it's so complex, okay? You see that, for example, with the amortization period, in my next video I'm going to talk about that. When you get, for example, a 30-year mortgage with Bank of America, they say that it's going to be 4%, okay? And after 30 years, whenever you pay off the principal and the interest, you end up paying at least 2, 3, 4 times more than what you borrow. And how can that be 4%? And that trickery, that magic, is done through the amortization scam, which I'm going to do a different video about because it's too detailed. But what I'm trying to talk to you about is that if you put your money into a bank, in a savings, they give you 1% interest, right? And if you want to get a mortgage from them, you're going to have to pay 3.94%. You want to get a credit card from them to use your own money again, they're going to charge you, okay, these numbers, guys, okay? But that was my second point, okay? If some of you guys say, well, I already know, man, banks got to make money, blah, blah, blah. Okay. I'm not even going to get into why you're a sheep thinking that, okay? Because they're printing money out of thin air through the Federal Reserve System, It's not backed by gold. They just print it out, and it causes massive inflation to you and to me, and it makes you and me a slave. And I'm going to give you an example of how it makes us a slave, okay? All right, so the inflation. Inflation is because our money is fiat, is not backed by anything, and they're just printing it out freely by truckloads and truckloads of it, or in a digital cyberspace-wise, same thing, okay? It creates a lot of inflation. And most Americans, smart college professors, whatever, PhD doctors, don't even understand what inflation is and how it affects them. They think, oh, it's normal, but it's not really normal. It's a hidden tax on you. It's a robbery of your wealth, of your time, and it's robbing you from having time with your kids, getting out of debt, pursuit of happiness, all that stuff, okay? And let me show you why, okay? Now, if you ask Big Brother, what is inflation rate? They're gonna say a little bit, between 2%, but really it's more than 3%, but I'm gonna put 3 in. The reason I'm saying this is because if you follow way smarter people that have PhDs that are economic professors that do their own computing of what the inflation is, because the way Big Brother considers unemployment is so tricky and funny, that actually is a lot more than 3%. But for the sake of being on the closer to the number of Big Brother, I'm just saying 3%, guys, okay? So they say inflation is roughly about 3%. The bank gives you 1% interest on your money, okay? So this is inflation, and you're gonna get 1% interest on your savings, okay? If you subtract that, you basically have a 2% left of inflation, okay? So what does that mean? That doesn't mean anything from any of us. Oh yeah, 2% inflation, what does that mean? Okay, so let's assume that you have $100,000 in your banking account, savings, all right? When the year passes, the bank's gonna give you 1% interest, right? Which is, they're gonna give you supposedly like $1,000. But that one of those percents gets canceled out by the inflation, which means that you have 2% inflation left. So if you do the 2% inflation, okay, you're gonna get $2,000. This is negative of inflation. So what that means is when you look at your online banking account, your saving will still say is worth $100,000. But in reality, you only now have $89,000 worth of purchasing power. What does that mean? That means that today, if you go to, let's say, Discount Tire, and you buy a tire for $100, in 2008, when you go there, next year when you go there, it's gonna cost you $110. And that's inflation, guys, because it's gonna cost more. So by you putting your money into the banking account and you have $100,000, after you cancel out your interest the Bank of America gives you, the remaining 2% inflation means you have an actual banking account that has a negative interest. You would not put your money into a banking account with the Bank of America knowing that every year they would take away $2,000 from you. You wouldn't do it, right? But the reason you don't see this is because it's inflation, it's underground, and we're good, man.
Do you want to?
Sure. Thank you, man. Appreciate it.
1 or 2?
1 is perfect. Thank you, man. So what I'm saying is, if you had a banking account with Bank of America, and they told you, hey, every year you're gonna lose money by putting your bank in there, not because of the monthly fees we charge you or any of that, just because you have to pay us to keep your money safe. You wouldn't do that, right? You say, hell no, I'll just keep my own money, whatever, right? Well, you're doing that right now, and they're pulling the wool over your eyes because of inflation, okay? You have your 100,000, you look at your bank statement this year, so oh, it's still 100. Next year, you're still 100 because you're not getting ahead. They're giving you a little interest, but then you got to pay the taxes, this and this. But really, your money's getting less and less purchasing power, but the number itself may look the same, okay? And that's how it fool you. And now some of you are saying, well, Mike, where should I put my money? I don't want to tell you. What I want to tell you is that you have to take control of your own destiny.
And you have to spend time and energy to educate yourself and educate your brain. And the more you do that, then you will be able to answer your own fucking question that you may have. So my thing is to go self-educate, to take control. Don't allow the institutions to pull the wool over your eyes, because if they told you right now that if you put $10,000 in your banking account and next year you're only gonna have $9,000, you say, fuck no, I'm gonna figure another way to keep my money safe, right? But they don't tell it to you like that. They say, hey man, you put 10,000 there, we'll give you 1% interest, you're making $100 a year. But what they don't tell you is that you're losing $200, actually three, one cancels the interest and the other two you're losing, and you're losing with purchasing power. So when you go buy a tire for Discount Tire, you can't buy as much. When you go to the grocery store to buy milk, your money does not have the same exact purchasing power, okay? It's gonna be less. So this is why I say fuck this stinky bankers. I don't like bankers. The founding fathers of America that created the American Constitution, they didn't like bankers. They wanted to get away from England for two reasons. They want to have freedom of religious. They didn't want to have the church with the state. And there were two, they were tired of taxation. And three, they didn't want some third-party company to print out their fucking monetary and enslave them, because this is enslaved through inflation. 90% of all the smart people, including myself, didn't understand this idea. I really roll up my sleeve and realize that, damn, I need to put my money in things that are hedged against inflation, things that are going to go up with inflation instead of savings. Because every year, if I put $100,000 in my bank account, I'm going to be losing $2,000. So next year I will have $98,000. Next year I will have $96,000. Next year I will have $94,000. And even though that my banking account still may say $100,000, but my purchasing power has significantly shrunk in 3 years by $6,000, assuming that the inflation is really 3%. And if you just do your own due diligence and you search around for way smarter people than me that are computing their own inflation through different stuff, they're gonna tell you that inflation is way higher than 3%. But I just wanna be on the positive end, guys, not just be on this side, okay? So go out there and hustle and bustle. If you find this video valuable, please like, please share it, and please comment. Don't take no for an answer. See you, gang.